All right, back to work. Weekend is over. Back to work. We got some money to make this week. Most importantly, though, we have a big day tomorrow. We got some major corporate earnings on the counter for tomorrow. More importantly, though, we have some major support on the 60-minute, and we got some juicy ranges on the tick charts right now. Combine some major earnings, big-time support in the 60, and some ranges. It smells like some great trades setting up here for tomorrow. And, we do it in these videos. I'm going to cover my favorite trades in the video tonight. I want to make sure you guys have a game plan to make some money on Tuesday. Now, before we jump in and get the party going tonight, make sure you subscribe to our channel. That way you don't miss tomorrow night's video. If you like these videos, give me a thumbs up. Give me a hell yeah down in the comment section. Thank you so much for tuning in, supporting the channel. Enough of the intro, though. Let's get ready for Tuesday. Tuesday, this whole week is shaping up to be a pretty exciting week. Peak week, as they call it, for corporate earnings. Now, let's start off tonight here on the 60-minute time frames. The NASDAQ and the triple Qs, the E-mini and the SPY. As always, I'm going to start my analysis on the 60-minute because the 60-minute makes it easy to plan the best trades for the following day. Later on in the video tonight, though, we'll drill down to our tick charts. Tick charts make the entry timing a lot easier. So we'll start off on the big picture, plan the best trades for tomorrow, and we'll drill down and talk entry tactics as we go deeper into the lesson here for tonight. On the 60-minute chart right now, there are two main components. You don't need me to tell you right now we're bearish, right? The 60-minute charts are all pointing down right now, so we are certainly a bear market. But you'll notice here as we go deeper into the video here tonight, we are sitting at quite a bit of support, basically monthly lows, that big drop that we saw in September. Right as we turn the corner into October a few weeks ago, we're right back at those big monthly quarterly lows right now. So big bear market right now, but I'll tell you, we're at some major support levels here on the 60-minute. And in a few moments, I'm going to show you guys the tick charts, and you'll see why I'm getting pretty excited for some range trades, some reversals, especially here for tomorrow. Now, before we dive into the tick charts and get our hands dirty on the entry tactics here for tomorrow, let's just double check the schedule for tomorrow. There is three things you want to keep on your radar. The first one, of course, is the news of the day tomorrow. We got pretty much the entire world is reporting their purchasing managers indexes, their PMI numbers in the U.S. Ours will be at 9:45 Eastern time. Remember, anytime we see big red star news around 10 o'clock Eastern time, in this case a bit ahead of it, you want to pay attention. The second thing you want to keep on your radar is tomorrow after the close. We have some pretty big companies reporting tomorrow. You may have heard of these guys, Microsoft and, of course, Alphabet. Both of them are knee-deep in the AI hunt right now, so there definitely is expected to be some fireworks around the closing bell into the Asian session tomorrow night. We got that on our radar for tomorrow. The third thing you want to keep in mind is we're all watching the headlines right now about the situation in Israel, the war with Hamas. We are watching that closely each day right now in our trade room, and those new developments coming out of the Middle East are very much a big wild card. We saw how much it impacted the markets late last week, so we'll keep an eye on that tomorrow, but be aware, PMI number at 9:45. Tomorrow night, we'll come back and talk about the reaction to the big Microsoft and Google Alphabet earnings tomorrow afternoon. And of course, we'll keep an eye on the situation happening in Israel and Hamas. Now, back to our charts. It's important to know where the big news events are going to be. But as always, right, the money is made on the charts. Now, why don't we jump in and talk about my favorite trades here for tomorrow. We'll start off tonight on the E-mini and the SPY. We'll finish up tonight, of course, on the NASDAQ and the triple Qs. As I mentioned in the introduction, we are bearish with a capital B right now. We're very bearish overall, but again, we're sitting at some quite significant support levels as we look left, and you can easily see that big move down that we saw into early October. Usually, and again, the wild card tomorrow and this week is the situation in Israel, but usually in situations like this, once we end up going 1, 2, 3 legs down, we usually see one of two situations. The first one would be a trading range, right? Bearish into a trading range. The second would be a 2 legged correction, potentially up into the underbelly of that range for what we call a breakout pullback running lower. So we're going to keep an eye on that as the week develops right now. But I think the most important factor tonight, though, is over on the tick charts. Let's now drill down to some faster time frames, some tick charts, because I think when you see how the tick charts are lining up, it'll give us a little more clarity and, most importantly, give us a couple ways to make some pretty easy money here for tomorrow. This is a 7,000 tick chart, by the way, if you're watching for the first time right now, and that is the 21 EMA. One of the most important tools we use in our trading strategy every morning in our trade room. There are a couple of things that we have kind of on our radar right now. The most important thing is we're an overall bear market. We know that. We got a bull move up into a trading range, and we have what's called a pendulum swing off the high. Now, this may be a new phrase for you, a new term for you, but if you're taking my free video course right now, this should make a lot of sense, right? We know that ranges, as I teach in the video course, the free classes, ranges love to rotate. So they'll rotate up, they'll rotate down, they'll rotate basically back and forth, right? Because ranges act like magnets. Now, we're an overall bear market, and you'll notice that this what we call rotation off the high. It goes up and rotates off the high. That is a lot of bearish momentum in the short term, but we do think that range above us is going to act like a magnet. So what I'd like to do is, and kind of my game plan going into tomorrow, is to look for ways to trade that rotation back and forth, buying low, selling high, buying low, selling high, and trading that rotation, especially ahead of major corporate earnings tomorrow afternoon. So as we go through the lesson here tonight, we'll talk about how to buy low. Remember, it's not a bull market, it's a bear market with a very strong run down, so we can be careful to buy low right now. We'll talk about a few setups I'm tracking here to buy low. Later on in the video, we'll talk about selling high, right? Because we're going to trade that rotation back and forth as we go. So let's unpack this and let's talk about what I'll be looking for tomorrow of my favorite entry tactics tomorrow in our trade room. Now, we talked about how this range is a magnet and we're looking for it to rotate back and forth, right? We also talked about how momentum is very strong, both in the short term on this tick chart and the long term on the 60-minute time frame. We also talked about how we're sitting at quite a bit of major support on that 60-minute chart. So I like the idea of being a buyer here, but momentum is a big challenge. Whenever I'm trying to fight the direction on the 60-minute chart and the faster time frame here, I always like to, I need to get some sort of juice, right, to get this reversal going back higher. This is where one of my favorite reversal patterns will come in handy here. It's called a crown reversal pattern. These crown reversals are very, very simple. It's a higher high in price and a trap below that low. You can see a similar example right over here, right, where it kind of goes up, higher high in price, and that trap below that low. Look for that pattern over here. Now keep in mind, right, it could be here. You saw earlier I put a measured move on there, right? It could be here, it could be here. The goal is to turn this thing back up into that trading range. So one of my favorite trades here for tomorrow is, again, what I call a crown reversal. If you're taking my free classes right now, this pattern setup actually wraps together a failure pattern and a bear trap pattern. I call them crown reversals for the run going higher here. Now, there's one more setup I want to talk about. Let's say, for example, we do get that run going lower. They take out that measured move, or they might even take out that low of day. I like the idea, again, of that crown reversal. But what if we got this? What if it pulled back and retested that low? What if we get a retest like that? We saw one of these this morning the trade room. If we go back to retest the low, now what I'll do is I'm going to look for what I call a double bottom reversal. Double bottom reversals are very simple. Once we get that double bottom, remember, we're still pretty bearish overall, right? We're not a bull market, so I need some sort of juice to get that reversal in my favor. And to do that, I'm going to trap these bears in. Let them try once, let them try twice, and think about, right? Think about where their stops are, and let's put a buy right into those stops. One of my first mentors, like a gajillion years ago, 15 years ago, he would always say, find a way to trap in. Remember, this is not a great place to sell short, right? We're at big time support on the 60-minute. Find a way to trap in this case, the bears in a really poor position and squeeze their stops. Okay, I call these double bottom reversals. We get that run lower, they retest the low, we trap the bears in with what I would call a failure pattern in my free trading classes. And then one more thing here is that as the market begins to make its way back up into that trading range, because again, we're looking for that rotation back and forth, the pattern we'll look for now is another one of those bear traps, right? Just like this. And again, it'll look like that pattern I mentioned right over there, right? So keep an eye on that double bottom reversal. Again, if you're taking my free classes right now, it'd be a 2-try failure. And then as we make our way back up into that range, look for that strong pop up, that higher high in price, and that bear trap right off that lows. Now, as I mentioned earlier, if you're watching this for the first time right now, this might be a brand new language for you. Crown reversals, 2-try failures, bear traps, rotation. Okay, I get it. Not to worry though. I teach all these patterns and all the principles I'm talking about here tonight. I teach all this stuff inside of our free trading classes. I'll put a link up here for you in the upper right hand corner. Grab that link and take that free trading course, because the strategy I teach in that short video series will teach you a stupidly simple trick we use every morning in our members trade room to know exactly where the best winning trades are going to be that day. And most importantly, I'll teach you 4 of my favorite entry patterns to help kickstart you making money on your own. I'll tell you right now, if you're not making consistent money right now, if you're sick and tired of missing the best trades each day, hit that link up there. Take that free course. It is perfect for someone trying to make the jump into full-time trading. And also, to be aware, too, if you can't get that link up there, I'll put all the important links, including my free classes and my Twitter feed. I'll put that down in the description of the video. So look down there, right? Grab that link and get registered there, that we can see a lot of examples of. I have hundreds of examples of things like crown reversals, right? Double bottom reversals back up into that trading range. You guys will love that free video series. So hit the link up there, upper right hand corner. Now again, like I mentioned earlier, right? It could be here, it could be here, it could be really anywhere around these big support levels as we go. I would love to get that measured move, take out that measured move, and then trap those bears in. Crown reversal up, maybe double bottom reversal, and back up as we go. And remember, if it starts to run going higher here, if it runs going higher, this is where that bear trap comes in handy as it rotates. As we say a lot in our trade room, when it comes to ranges, it's failures at the edges and traps as it rotates. It's failures, right? Breakout failures at the edges and traps as it rotates, right? So as it goes, if it goes higher here, look for those traps, right? That higher high in price and that trap low below that low. Now, what's the game plan as we go back to take out these highs? How do we short this thing, right? How do we short this thing back down again? Because you know there's probably lots of bears up there with this overall bear market. And what do you think? Is it possible to get a breakout going higher there? Let's dive in on the NASDAQ. The NASDAQ is almost identical to the S&P. Let's look at the NASDAQ here right now on the 60-minute. The NASDAQ is virtually the same situation. We got a big bear market down right now, very bearish as you can see here on the 60-minute, but we're running into quite a bit of support at that major low from what is ultimately late September, early October here. Again, whenever we see a market run into support like this in a bear market overall, we're looking for either a two-legged pullback, probably into the under underbelly of that range. We call these breakout pullbacks, right? They break out, they pull back and run back down to retest the low, or we expect some sort of range to develop, which, as you can see, would really help the game plan we've talked about already here in the video here tonight. So let's go look at the tick chart now. This, of course, is a 4,000 tick chart in the NASDAQ. NASDAQ is not as much volume as the S&P, which is why we use a slightly different tick chart value on the lower time frames. Most important thing right now, same basic idea, right? It's a strong run up. It's into a trading range. If this wasn't a bear market overall, it would be almost a guarantee that we make that run at some point. Again, I get this measured move right there marked up. And of course, we'll talk about measured moves in our free trading class as well. But, you know, if this wasn't such a bear market overall right now, this would be pretty easy. This should be moving right up into that trading range. The question we have, of course, is the overall bearishness in the market right now. So we talked earlier about on the S&P, right? It's that, what was it again? It was that crown reversal. And the reason why I like the crown reversal here is because, again, we're so bearish overall. For all I know, they'll try to run this thing down and take out those lows right now. The bottom line, though, is it's very difficult to sell right here. It's very difficult to sell whenever I have a very strong run higher. Strong runs love to retest, and a range acting as a magnet overhead. Could we go lower? Of course we could go lower. It's an overall bear market, and we know we have that measured move waiting below. So the exact same game plan I gave you on the S&P can be applied here right now on the NASDAQ. Let's say now, though, as we go higher, if we can go higher here, remember, the amount below the range gets projected above the range. That creates an area of resistance right now. How would I sell up here? How would I sell? What's the problem? And there's always a problem. There's always a problem, right? There's no free lunch in trading. There's one of two problems with to deal with. It's location or momentum, right? There will always be a problem. If you don't know what the problem is, you're just simply not aware of it yet. There's always a problem of either momentum or location. If I want to sell, right, back down again, what's my problem? It's not location. Location's great. We're above resistance in an overall bear market. Great spot for a reversal. My problem is we have all of that momentum coming off that low. That will be a very bullish market in the short term. Obviously, I trade off faster time frames, so for me, it's a very bullish market in the short term. So if I want to be a short seller up there, just like we talked about being a buyer off that low, if I want to short off the top right now, I have to respect the momentum in the short term. I realize we're overall bearish. I get that, but trying to step in front of a freight train like that, it's very difficult to pick the top. Right? It'd be very difficult to pick that top. For all I know, it will keep on going and going and going to take out some big levels up overhead. So in order for me to want to short this thing, we're going to use another one of those crown reversal patterns. This one's the same pattern, it's just different direction, right? It's a lower low in price and a trap above the high. What is really happening with a crown reversal pattern is we are trapping in the buyers. The buyers will come in, they'll try to push it higher once. We'll pull back to a lower price, attract in more buyers. The buyers will come in and try another time. At this point right now, all those buyers who got in, their stops are sitting right below that low. This is where their pain is. This is where our fuel is, right? To reverse this thing off the high here. We need that fuel. We need that fuel, and we need to sell as high as we possibly can because, again, right, we are going to have some bullish momentum kind of against us at that point. This is where a crown reversal is always going to my favorite trade here when I'm going against that momentum direction, but I want to be a seller, right, because range below us, and we're an overall bear market. Make sure you get that lower low in price, that trap of that high, and as I teach in the free video course, I want that nice strong close, that convincing close below that 21 EMA. What if this happens? What if we run up? we pull back and retest that high. This is that double, in this case, double top reversal. We mentioned earlier on the S&P, strong run down, retest. It's 1, 2, a 2-try failure, and buy into stops on that. Remember, I don't need a crown reversal on the double bottom. I need it on the first run going lower. As we go higher, I need that crown reversal to short off that top because we have all that momentum trying to retest that high. If it pulls back and retest the high now, remember, buyers are trying to buy low. Once they retest the high, most of those buyers are going to take a big chunk of their profit, and bears, we assume, because we're overall bearish on the 60-minute, are going to come in and try to whack this thing right back down. I could be a lot more aggressive on a double top reversal. Now, I'm not going to pick the top on this, right? That's a rookie's mistake. We don't pick tops and bottoms. It's very difficult to pick the exact tops and bottoms. You know this already, most likely. We probably have learned this lesson the hard way already. But once those rookies come in, once those buyers come in and try to get long a few times, who's buying up there, by the way? Who do you think's buying up there? Not professionals, not experienced traders, certainly not, right? Professionals are buying way down here. They're taking their profit up around that high. You could easily say that everyone is a seller up there, right? Everyone is a seller. The buyers who got in down here, they're getting out, taking their profit. We know they're going to be bears up there because it's an overall bear market. And once those buyers try once and try twice, we can literally eat their lunch and run their stops. Fuel, right? Fuel this. We talk a lot about this in the free trading course, right? My favorite way to trade is to trap traders on the wrong side of the market and use their stops to fuel, in this case, reversals back and forth into that trading range. And remember what I said earlier, it's failures, right? It's failed breakouts around the edges. And then as we go lower, what's the pattern? It's, in this case, it's a bull trap. It's a lower low in price and a trap above that high, right? We mentioned this earlier, right? As the market rotates back and forth in a trading range, it's failures around the edges. It's failure patterns, crown reversals, 2-try failures around the edges, and it's traps as it rotates. Now, one very important question that we talked about earlier was, what would happen here right now, right, if we were to break out and run higher? What will probably happen is we'll probably end up getting, if we do get that strong breakout going higher, we'll probably get that crown reversal, right, for that short. And then as it drops, remember, don't forget, anytime we see a range like this, right, basically the top of that range now, it sets up for a breakout pullback, right? So if this thing really begins to run and go higher here, I think we can probably easily play both sides of the market. I'm going to have to trap traders though, right? If there's one key theme for tomorrow is we have to use stops to fuel these moves here for us. At least in my eyes, we do. As we pull back, think about that range, right? Think about that pop up into that range. Think about now that breakout pullback, as we always talk about, of a trading range. Now, again, when we end up pulling back here right now, this will be pretty bearish, right? Overall bear market. So let's wait for those bears to come in. Let them try once. Let them try twice. Remember, anytime we have a strong breakout like this, we anticipate that breakout pullback to retest the high. So why not go in, trap those bears in? Again, this is the NASDAQ. This will also apply to the S&P, and look for that failure. And then you got to really be careful as we're going higher here. That trap pattern will be the key to retesting that high. And then what do you think? Once I retest the high, well, then what do we do? Yeah, baby, the double top reversal, right? All the buyers who get in on the failure or the bear trap getting in, remember, higher high in price, trap low, right? 2 tries, run those stops. Once we take out those highs, right, everybody who got in the pullback, they should be taking a good chunk of their profit because, again, we're in a bear overall market. Let's take out that high. Let's trap in the rookies who are not buying low, right? They're chasing it going higher, and use those stops to fuel that double top reversal, right, back down. And potentially, this may end up creating one big range as we go into the big corporate earnings earnings here for tomorrow. So this is the game plan on my mind here right now. As we go lower, I'm looking for that crown reversal. If we do double bottom, it's the 2-try failure. Anything that goes higher right now, anything, it's a bear trap before we retest those highs, right? It's a higher high in price, and that trap, we go up. 1, 2, crown reversal, back down. If this move higher is strong enough, we'll know tomorrow morning in the trade room. We can then look for that 2-try, that failure, for that snap back up to retest the high. Why? Because it's so bullish in that scenario. It's highly likely, nothing's guaranteed, it's likely to go back up and take out that high. And then once we do, right, rope those rookies in and dump it right back down in. Lots of failure patterns right now, lots of failures, because we anticipate that those big ranges to form on the 60-minute, right? So trap the buyers in, short it, trap the sellers in, back to the highs, trap them in, back and forth. You can easily see that's probably where the easiest money we made here for tomorrow. And don't forget, with those big corporate earnings, right, tomorrow afternoon, be careful as the day gets older, because the closer we get to the closing bell tomorrow afternoon, the fewer the big players are going to mess around tomorrow with those huge earnings from Microsoft and Alphabet, Google. Now we wait, right? Now we see, do we make them run lower and then back up? Do we go higher? Either way, though, the game plan is all set. Now, tomorrow morning, 8 o'clock Eastern time, we're going to trade this stuff together in our trade room. I can't think of any better way to learn to trade than to do it with me tomorrow morning. Come out, ask a bunch of questions, look over my shoulder, model all your actions, trade along with us, learn and trade with me tomorrow morning. I'll put all the important links I mentioned earlier. I'll put the trade room links, membership links. I'll put the free class links. My Twitter feed, I'm always posting stuff during the day on Twitter. I'll put everything down in the description of the YouTube video. I would definitely recommend start first on the free video classes, learn the basic strategy, get warmed up, get familiar with how it works. I feel like he's ready for trading with us sometime soon in the morning trade room. All right, guys, hope you learned a bunch here this afternoon. Hope you used this knowledge to earn a bunch tomorrow, and hopefully I'll see you sometime soon as a student, as a member. Trade along with me sometime soon in the morning trade room. Got any questions? Any comments, concerns, any challenge getting access to any of the free classes right now? If you do, don't be afraid to call the office. Megan and I are always here to help out, so don't be a stranger. If you got questions, give us a call, use live chat. We're always here standing by to help out, answer questions about whatever you need help with going forward. All right, guys, thank you so much for watching here tonight. I appreciate you guys sticking around all the way to the end. Enjoy your evening. We'll see you guys tomorrow morning, 8 o'clock Eastern time in the members trade room. If not, same time, same place, back tomorrow afternoon, and we'll do it all again. As always, be well, be nice to each other out there, and you better be here next time. Adios, amigos. Bye-bye for now.